Hey there, gang, and welcome back to the New Blocks episode number 3. Today, we're going to be talking about a very fundamental concept, Bitcoin itself, the first of the cryptocurrencies. Kevin, we're getting one step closer to finally touching these keyboards. I just want to write some code, buddy, but we're going to go deeper today. How the hell are you, bud? Welcome back.
I'm doing well, man. I'm doing real well. It's been an interesting couple weeks here. We are just off the heels of the I guess in the middle of the GameStop stock situation. That's been fun to follow.
Yeah.
It's it's wild, man. I mean, whether malicious or not, the idea that an exchange or a broker could sort of censor individual stocks and limit the amount that retail investors can buy. Again, doesn't even need to be malicious. The idea that that's a possibility is probably something that we should change moving forward. Would you agree?
Definitely. It's pretty wild to be living in this real-time experiment of seeing some of the drawbacks to centralization while we're trying to utilize these platforms. That's not free market, baby. I should be able to sell the stocks that I bought and then buy more of them. That's how it's supposed to work.
Yeah, markets don't typically work efficiently when you can only sell and they remove the buy button, right? And I think longer term, decentralized finance solves this. This is what it's all about, baby. So I'm looking forward to getting deeper into this rabbit hole. But first, let's talk about where it all began. Let's talk a little bit about Bitcoin.
Yeah, baby. Take me back. I'm ready for a big history lesson. Now, I know this name's Satoshi Nakamoto, right? That's this mysterious figure that's been surrounding Bitcoin, but I'm excited to learn more about him, her, they, whoever this mysterious figure is. And when did all this shit really get started, man?
Yeah. I mean, like any good story, it starts with a great mystery. It started back in 2008. What's called a white paper it was released that described this idea for this new peer-to-peer digital cash called Bitcoin. A white paper is just a technical document that sort of outlines the architecture that you would need, maybe the cryptography in this case that would be necessary to build this sort of peer-to-peer digital cash system. And it came right off the heels of the 2008 financial crisis. Mm-hmm. It was really a direct result of it. Included in the first original block of Bitcoin, you can include data outside of just transactions. Included in that block is a headline from the UK, a newspaper in the UK that says, Chancellor on the brink of second bailout for banks. And it's sort of a direct point of reference for people that are sort of getting into Bitcoin to understand why we're doing all of this to begin with. Why do we need peer-to-peer digital cash? Because look at what happened in 2008, right? We all gave our money to financial institutions anticipating that they would, invest it properly and right. But it turns out that given the legal infrastructure at that time, they had the ability to just completely disregard all risk. And we were the ones left holding the bags. I mean,
that's called crony capitalism, I think, right?
Exactly.
It's put in that capitalism box, but really you're giving your buddies, your friends, these too big to fail. I've heard that as a pretty anti-capitalist term. That money was pretty centralized, to go back to one of our favorite buzzwords.
Yeah, exactly. And so that sort of kicked off this whole idea of what if we could take money out of the hands of the government and make it something that was peer-to-peer, individual to individual, in the same way that physical cash is. There's no third-party banks when I hand you a $5 bill, but when I swipe a credit card, right, it goes through Visa and then Chase and then a whole series of intermediaries and clearinghouses to finally then get back to the person that I want. Of course, each one of those taking a cut in the process. So the idea behind Bitcoin is let's build a system where we don't need any of those third parties in the middle.
Let's take the power back. Let's, as the people, own the means of production when it comes to financial instruments.
Exactly. Yep.
There you go.
And so Bitcoin, the first version 0.1 was released in January 2009 into sort of a forum of cryptographers, computer scientists, nerds that would be potentially
cypherpunks, dude.
Yeah, exactly. Big in the cypherpunk world. It's this idea of anyone that was really kind of interested in trying to solve this problem. Immediately it clicked for them. And for most people, myself included, first time I heard about Bitcoin, it was like, this sounds like fake nerd money. This isn't going to work out. But yeah, in the early days, it was all just the uber nerds, the computer scientists.
Yeah, I mean, now we have exchanges. So this idea of, well, what was Bitcoin worth back then is a pretty easy thing to wrap your brain around. But back then, there were no exchanges. We're talking purely about like internet monopoly money that somebody just kind of created and threw out there. It takes a while for there to be any assessed value attached to that. You know, what is one Bitcoin worth when there's no going exchange for Bitcoins? Whatever you're willing to give me for a Bitcoin. It's a blank canvas, baby.
Yeah, and I mean, someone had to be the first person to actually use this as money. So about a year later, in 2010, a couple Bitcoin miners were hanging out on a forum and said, "Hey, does someone want to buy me some pizza? I'll pay you in Bitcoin. Here's the phone number for a pizza place near me. Here's my address." And I'll send you 10,000 Bitcoin for it because, you know, I've got all these Bitcoin lying around and I don't really have a use for it. And that was the first real pricing of Bitcoin.
That's so crazy to think about. And obviously 10,000 Bitcoins now is a staggering amount. I mean, we're talking hundreds of millions of dollars.
Yeah, right? 335 million as of, I think, the other day.
Okay.
But yeah,
there you go.
So a very expensive pizza, but, you know, the first person through the door, they're gonna get shot. Someone's gotta, you know, be the pioneer in this space.
It's also, simultaneously like the biggest win and the biggest loss in the Bitcoin community ever, because in some ways it's so fundamental that like this transaction was so valuable to the foundation of our community, but at the same time, that poor soul got ripped off harder. Like you were complaining about buying a $50 keyboard with your Bitcoin. I mean, he dropped 10,000 coins on some cheese.
Yeah. But for what it's worth, I mean, if he, you know, picked an arbitrary number of 10,000 Bitcoins, it probably means that he has a lot more.
True.
I think in more recent interviews, he's sort of, you know, he's taking it lightly. He recognizes that, like, it would have been nice to have not done that. But at the same time, I think he's doing well for himself. So.
Yeah. That's a fair point. And one of the things that we've gone back to with Bitcoin, like we're talking about this fundamental, like what is it that made this innovation so special in 2008? The word trust still comes up, right? That is really the key. If you had to summarize it in one word, a network where peers or users can trust each other without a middleman. I can just write how much I want to send you, put in the fees, and you get it, and I don't have to worry about it. That trust is really the key aspect of why Bitcoin is so cool compared to these financial institutions that we're relying on as middlemen.
Yeah, and the technical foundation of that trust it occurred in Bitcoin due to another sort of innovation that was included in the Bitcoin white paper. So the Bitcoin white paper introduced this concept called a blockchain. And a blockchain is just a database that exists on the internet that anyone can write to or read from. And it's this idea of sort of this like foundational layer above traditional databases, right? So if you go to Google, Google has their database, Facebook has their database. Individual companies all sort of maintain and run their own databases. A blockchain is just a global database that anyone can access and that is entirely permissionless. And the foundational breakthrough of the blockchain is massive in terms of the computer science problem that it solves underneath. It's called the Byzantine generals problem. We'll get into that in the next episode. But it's been a long pursued problem in the computer science space, and the introduction of the blockchain completely changed the way that you can sort of trust information that's being sent around the internet.
Okay. Yeah, you and I have talked about this off camera a little bit, but it's this idea of sort of digital ownership, this like digital thumbprinting of, I own this thing that's not tangible, it's digital, but I actually own this piece of it, and I can prove it by putting in my code and pointing to this part of the blockchain that's mine because I have the access keys to it. That is sort of a hard thing to wrap your brain around, but that level of data integrity, like you said, that's something that computer scientists have been working on for like literally decades now, right?
Yeah.
I mean, half a century almost, I guess, really.
Yeah. And so the introduction of the blockchain allowed us to solve a problem specific to the digital currency space known as the double spend problem. It's this idea that when I send you an image over the internet, I don't lose access to that image. I'm just copying it, and now you also have a version of it. That doesn't work well with money, right? So we need this idea that I can't send you $5 while also retaining $5. Like, I need to lose access to that, or else you can't really have digital money. So the blockchain solved the Byzantine generals problem, which allowed Bitcoin to solve the double spend problem. And that's sort of where we are in terms of from kind of the computer science aspect of it.
So sorry to keep going slow here, Kevin. I just want to make sure I've got my brain wrapped around this. So you're talking about outside of Bitcoin, anytime I send a file to someone, it just gets copied. I'm not actually taking the file on my computer and putting it on your computer. I'm just copying it into an email, and then a copy gets made on your computer, and we're both reading our individual copies of whatever I've sent you. Is that correct?
Exactly.
That's basically how the traditional internet works. And now we're talking about ways of that file is one thing, and I lose access as you gain access, and if you give it to somebody else, you lose access as they gain access. Just like if I give you a quarter, I lose that quarter once you walk away with it. That's
exactly.
Basic and complicated at the same time, bud. That's pretty cool.
Yeah, I mean, it's weird because we've sort of had digital money for a while now, right? But the only way that things like Venmo work is that there's this central intermediary that sits in the middle, and they do the act of removing $5 from my account.
There's a billionaire at PayPal that takes a little 5% off of every transaction and gets to stick it in his pocket for going, oh, thanks, Kevin. I'm going to give that to Andrew. Okay, cool. I'm done.
Yeah, and so now we're moving from a system where a billionaire is going to capture 5% for, turning a 1 into a 0 and sending some information across the internet. And we can now just do that natively with the infrastructure of the internet. And we don't need a third party that's capturing whatever percent of it. This might be a good time to talk a little bit more about the specifics of Bitcoin. I wore a shirt today that was very relevant. This is a Jackbox TKO shirt that a friend drew, and my wife decided to buy it for me.
You're that guy at the party. I see.
Yeah,
okay.
Exactly. Yeah. So let me tell you a little bit about Bitcoin. One thing to note about Bitcoin in particular that's different in other digital currencies is that it is both the name of the network, of the blockchain, of the
database,
the database, the miners, anyone that sort of interacts with it. That's sort of the Bitcoin network. But it's also the name of the actual currency that moves around that network.
Like dollars. Yeah, like Bitcoin is the equivalent of dollars. Okay, so the term can be confusing depending on context.
Yeah, this is different than a network like Ethereum, where Ether is the asset that moves around. But for Bitcoin, you can just say, I'm sending Bitcoin across the Bitcoin network.
Okay. Hey, when you're the first, it's hard to come up with convincing naming conventions. I guess when you're focused on the tech, the naming conventions seem completely arbitrary and pointless. And then over time, we get stuck with some of these confusing labels. But hey, that's where it's at.
Yeah,
Okay.
It is what it is.
That's a good thing
worse,
to note,
right?
though. Yeah.
Yeah. So there will only ever be 21 million Bitcoin. How do we know this? One of the core principles that the blockchain introduces is this idea of true immutability. And so the term immutability means sort of that it can't be changed. And the way that it does this is it makes it provides a system of incentives for the users of the network to work in the best interest of the network and be punished if they are trying to work against the interests of the network. So that's a lot. Let's slow down and unpack that a little. It means that we have a system where if I want to, try to cheat the system, maybe I want to say that I want to send $20, but I don't actually even have $20. And if I were sort of involved in running this network, I would propose this transaction. And if I could convince 51% of the network to join me in that pursuit, then that transaction may occur. It would involve what's called a fork in the network. And we can go into that a little bit later, but changing the rule set of the network is extremely, extremely challenging. And so that's why it creates this idea of immutability.
So Okay, I think I understand what you're saying, but I'm going to try to summarize it to prove that I understand what you're saying. Basically, the network verifies itself through crowdsourcing. You have millions of people that are all contributing to the Bitcoin network with miners, right? And when they're doing that, they're verifying that the blockchain consensus is what is actually on the blockchain. Like everyone's looking at this database, all these miners are saying, yep, that matches the data I have. And when enough people all match, you can rightfully assume that the data is correct. If a million people all go, nope, that's what the blockchain is supposed to look like, they all agree, and then the system of the blockchain can move forward because we all agree on the history. So you as one person can put bad data into the database and say, hey, look, I actually have 20 Bitcoins. You guys just forgot about it. All the other workers on the network will go, oh, no, I don't agree with that guy. And if everyone else is against you, then the network knows, okay, that's just a single bad actor. It's that like democracy consensus spread out across millions of people all over the world is what creates the de-incentive to try to put bad data into the network. Did I say that right? I hope people aren't glazed over right now. But yeah, so it's all about like reaffirming the data that is in the network through the people of the network. And the bigger the network gets, then the harder it gets for individual actors to try to get bad stuff put in there.
Yep, exactly. Okay. And so 21 million.
That's wild, man. That's pretty cool. Million. That's some smart shit.
It is, and it's an alternative to the existing fiat-based financial system where we can just kind of play with the rules as we go. If we elect a leader that wants to kind of print some new money and give it to some of their friends, that's fair game in the old system, but it's not fair game in the new system.
Yeah. Okay. So, and you'll just go bankrupt if you continually try to say, nope, Kevin's got 20 Bitcoins. Trust me, guys, I'm going to keep pushing this. You have to pay money to communicate with the network, right? So you're paying money to lose the democracy vote every single time. And over time, that means people will try less to put bad stuff into the blockchain.
Yep.
Wow.
And that's what leads to this idea of this digital gold meme where it's sort of there's a finite supply. It can't change. It becomes harder and harder to mine over time, and you get less and less. The final Bitcoin will be mined at around 240, the year 2140. Just based on the sort of issuance schedule in Bitcoin. Every 4 years is what's called a halving, where the issuance of new Bitcoin gets cut in half. And it'll do this every 4 years until we get to 2140, and that's sort of the point at which the final Bitcoin is.
So we're going back to this, it's not
disinflationary.
Disinflationary, that's it. So it's not deflationary, but it's inflating at a lower rate over time. And I guess we're going to do a whole episode on mining, but very quickly to kind of unpack what you just said, the miners help that democracy of the network. Like you use computers to say, hey, we're going to look at this blockchain and verify that it's good. Miners that do that get paid a little bit of a kickback for contributing to the network. So when you're talking about the halving, that reward that they get for contributing to the network gets cut in half every 4 years. So it becomes less profitable to be a Bitcoin miner the longer Bitcoin is in existence and the closer we get to this 21 million supply cap.
Yeah, that's right. And so the income of a miner comes from two places. It comes from, one, the issuance of new Bitcoin, the reward for doing mining. They get to write themselves a check for some new Bitcoin. And it also comes from transaction fees. So every time that I want to move Bitcoin around the network, I want to send you money, I pay a small fee that goes to the miner that does the work of sort of facilitating the network. So the idea is over time, the hope is that the Bitcoin network will transition from being subsidized entirely by both new Bitcoin and transaction fees to being run and subsidized entirely just on transaction fees. But we've got about 100 years to go before we see if that actually ends up happening.
Don't have to worry about that yet. Okay, good. Yeah. Plenty of time. All right. Wow. Man, this is so much to unpack, but I have this real solid appreciation for Bitcoin now, way more than just the price tag. That's
And so, like, zooming out a little bit, why does Bitcoin matter? So first, we talked about how the blockchain sort of introduced trust as this internet native protocol. The idea that I can sort of now interact on the internet in a way that doesn't involve third parties to send value.
From anywhere in the world, right? Not country specific, not bound by culture, by laws. Just if you have access to the internet, you have a wallet, you have the ability to do financial transactions with Bitcoin.
Yep, exactly. I mean, the internet doesn't understand the boundaries that we've come up with in nation states. And similarly, the blockchain and Bitcoin, there's no concept of that. All it knows about is these different addresses, these different wallets that you're sending money to and from. And so Bitcoin then introduces this idea of actually transmitting value as sort of a native content type to the internet. And what do I mean by that? Prior to Bitcoin, we've had these different ways to store and talk about data. You have numbers, you have strings of characters that we use for language, and now we have this new. Yep, and now we have this new way to transmit actual value around the internet. And yeah, first borderless money. We now, anyone with an internet connection has access to banking and store of value. And it introduces this idea of a separation of money and state. And this is sort of the hard one to wrap your head around. I mean, we've known and learned all in history class about this idea of separation of church and state, and sort of seen what the effects of that have been over time. It's sort of led to this place where we can, we can live in the way that we want to, because the church isn't gonna, you're not going to be persecuted for your beliefs.
Breaks apart control structures. Yeah,
exactly. Yeah. And so I think similarly over time we now have this emergence of a separation between money and state. Of course, like the United States still has the US dollar, and all these other countries, the euro still exists, and it's governed by the European countries, and like all of this still exists, but we now have this like alternative path that's emerging where you can have money that doesn't know anything about nation states.
Yeah. And again, this, if you're American or Canadian or European, you might be watching this like, well, what's wrong with my country, my nation state, and my currency? And there might not be nothing wrong. There might not be anything wrong with it right now, but there are other countries where there are some big issues with their currency. China is a place where financial ownership is very complicated, and the government has a lot more control in terms of just turning off your bank account if you do some stuff that they don't like. That's where stuff like Bitcoin creates this next level of kind of like digital freedom, to parrot a meme there, You're like a digital pirate there, Kevin.
It feels that way sometimes, but maybe less illegal shit. But yeah,
fair.
I get that. Why don't we take some time and do some lightning round questions?
Okay, that's good. My head's swimming a little bit, but I like it. This was a dense episode, folks. If you're still with us, you're doing great. This is complicated stuff. Give yourself a pat on the back. If you had to pause and rewind, there's nothing wrong with that. You're par for the course. Trust me, we've all been there. Rereading articles over and over.
I appreciate that reassurance too, because it's taken me years to sort of be able to understand a lot of the stuff, and it's a rabbit hole that is not going to make sense in 1, 2, or 3 episodes.
Yes, absolutely. So first question, Kevin, does it really matter who this Satoshi Nakamoto is? I mean, I know we all like a good mystery, but if they came out tomorrow, would it really change stuff? Would that be a good thing?
Yeah, I mean, it's sort of relative. I think it's maybe sort of ended up being a good thing for them to remain anonymous. I think it could put them in actual danger if they were sort of a known person. I mean, that being said, we have alternatives now like Ethereum, where we know who sort of came up with the idea. But I think the important thing to remember here is that it doesn't really matter what Satoshi Nakamoto thinks anymore. They sort of push this out into the wild, and Satoshi Nakamoto does not have any more control of Bitcoin any more than you or I. I mean, they do have sort of their initial supply. As the creator of this currency, they were obviously the first person that was mining it, and so they've got a bit of I think it's a
start.
Yeah, they got a bit of a head start. But you can't really build a system any other way without that. It's believed, we don't know exactly, based on sort of the way that Bitcoin makes it difficult to see who owns what. We don't know exactly what Satoshi owns, but we do think it's roughly around 5% of what the total supply will be.
Okay. It's like a million coins, something like that, give or take. A million Bitcoins.
Yeah, and so that's alarming to people, and it's a valid criticism.
It's a lot of money.
It is.
I mean, 10 years from now, somebody could just pop up and go, by the way, I'm a trillionaire now. Thanks, everybody. Bitcoin's been awesome. That could have some potential effects on the real world for sure.
Yeah, but I do think that it's important to have some perspective. In America, the top 0.1% of our citizens own more wealth than the bottom 90%. This idea of wealth inequality, it's a hard problem to solve, right? And Bitcoin may not solve all of this at once, but just introducing this alternative path for people to take, especially if you're living in a country that doesn't already have sort of the most robust financial system. I think it overall, I don't think it matters too much who Satoshi is personally.
Okay. Yeah, I guess that makes sense with all those early coins that they've got. 5% sounds like a lot, but when you throw out that stat about the U.S. government, that's really not a lot. That's it could have been way worse. It could be way more egregious, right? They could have kept 50% if they wanted to, if they didn't care about the integrity of Bitcoin.
Other cryptocurrencies that came around after Bitcoin did exactly that. Ripple, XRP, they just printed themselves a check for the vast majority of the total supply of that currency. And that's why they're being sued by the SEC right now. So there was no pre-mine with Satoshi's Bitcoin, and she or they just mined it like anyone else. Gotcha. So I've got a question for you. What are all these other alternative Bitcoins? I've heard of Bitcoin Cash, ABC, Satoshi's Vision, Bitcoin Gold. What are all these?
Yeah, this is a big question. And like a lot of these questions, we're going to do a whole episode sort of dedicated to forking and all of these different offshoots. But decentralization, it's a mixed bag. It comes with a lot of benefits, but there are a couple of drawbacks. And one of those drawbacks is once this protocol's out there, it can be reverse engineered and copied by anyone. And we've used this term democracy. We've used the word consensus a lot. What happens when half of the network says, we want to increase the Bitcoins to 30 million instead of 21 million. And the other 50% say, no, we don't want to do that. We're firm at 21 million. We don't want to change it. Eventually, if they can't decide, it'll split, and half of them will take the blockchain and start their own and call it Bitcoin Gold or Bitcoin Silver or some unique identifier, so you know that it's different. And then the other part of the fork will go on, and you'll have one blockchain split into two blockchains. This is happening less and less now because it's harder, and the networks are getting bigger, and the more mainstream we get, just the more challenging a fork is to execute. But historically, I mean, 3 or 4 years ago, this was happening pretty regularly, and it's a really interesting topic to unpack. So TLDR, it basically has to do with low barriers of entry and the fact that if we wanted to, we could make Andrew and Kevin coin. It wouldn't be worth a damn. We might be rolling the dice on getting sued by the SEC, but technologically, we could make it. We could allow people to mine it, and we could try to sell it on exchanges. And fundamentally, that's why there's hundreds of cryptocurrency coins now.
Exactly.
Okay, so last question, Kevin, and this is a good segue here, perhaps. How about regulation? What are we talking about with taxes? This stuff's money, but I can't spend it like money. What about the tax man?
Yeah, so it's important to know that cryptocurrencies are not taxed like currencies. They are taxed more closely to stocks in that they require you pay capital gains tax, short-term and long-term capital gains, depending on the amount of time you've held it. That's in the United States. It differs all over the world. Every country has to come up with how they want to tax Bitcoin, and more so than just how it's being taxed. The way that a country decides to regulate Bitcoin is really, it's going to differ from place to place. I think we just saw earlier this week, India is now considering banning it. They are in the middle of some huge protests. I think they have internet cut out in New Delhi. That we're going to see the whole spectrum of reactions to Bitcoin as countries sort of recognize that they may not be a fan of this idea of the separation of money and state, right? I think China has similarly tried to ban it in various ways and sort of eventually threw up their hands, because at a certain point, by banning something like Bitcoin and just banning the ability for people to use whatever money they want, they will remove themselves from the global economy on a long enough timeline. I think it's sort of a game theory that needs to play out over the years, and every country needs to come up with how they want to sort of posture themselves for or against Bitcoin in different ways. And it's when you're talking about global money, removing your people from the global economy in that way, I think it becomes a question at the end of the day, whether it makes sense for these individual countries' currencies, the US dollar, the euro, all of the 200 plus countries that have their own currencies. They all sort of have their own attributes about their money, and they care about that. But when we're talking about a global money, there will sort of become a point where we have to question if it makes sense for these 200 individual country currencies to be more valuable than these larger global currencies that are accessible to anyone in the world. And I think on a long enough timeline, we're going to continue to see the shift that we have been, which is that Bitcoin and Ethereum and these global currencies are sort of the way things are moving.
Yeah. I mean, I agree with you when it comes to innovation. You don't want to be left behind. I think it's a very short-sighted approach. It's like, let's just ban Bitcoin. We're going to ignore that because if Bitcoin does become a global protocol that most countries are utilizing, you will be so far behind. Trying to make up that ground it's hard to contextualize how far behind you could be. Reminds me a lot of the AI conversations. You know, if you're behind the curve, the supercomputers get so far ahead that you can never catch up. Really fascinating stuff, and I'd love at some point to do a whole episode on game theory and global economies, and really unpack that stuff. But Kevin, this was a fantastic episode, dense but good. And again, if you made it this far, thank you so much, folks. We've got so many more episodes to come. Make sure you find the New Blocks podcast everywhere you find podcasts. We're on iTunes, we're on Spotify, we're on YouTube, youtube.com/ZyoriTV. Hit that subscribe button, get all this new content, and tell your friends. Give us some feedback. Drop us a comment if there's stuff you want to hear about. If you're confused, if we said something that didn't quite resonate, let us know. You're always welcome to join the Discord as well and engage with us one-on-one for more individual questions. None of this is financial advice. We're not experts. We're just trying to open your eyes to some of this amazing technology and help make this journey a little bit easier, because a lot of it is very technologically dense. So, Kevin, buddy, until next time, man, have a good one, and thanks a lot for your insight per usual.
Yeah, absolutely. Nice chatting with you.
All right. See you guys.